raised funds worth 430 crores through a QIP. Sanjay Jain, the group CEO of the company, is joining in. Going ahead, Mr. Jain, good morning. Thank you so much for joining in. What does this fund infusion do to your company, Mr. Jain? You plan on expanding into newer markets, newer geographies, and also what kind of growth are you expecting from this post this fund infusion? And if you can also tell us what does that do to your balance sheet as well?
Yeah, hi, good morning. This fundraise for us had multiple objectives. I think number one, while we continue to be asset light, but we would look at a selective brownfield expansion of our manufacturing in India, and on top of it also somewhere in Africa or Latin America. That is in line with the global sourcing strategy of our customers. Secondly, we believe there would be opportunities of doing the back-end brand management for our retail customers. So we could look at, getting into some wholesale brand management and also the back-end management. Thirdly, PDS is very positive about entering into newer markets. So while we have been well entrenched in UK and parts of Europe and now expanding into US, we believe in Scandinavian markets, there's an opportunity for us to expand and grow. Fourthly, that this money would also get into balance sheet augmentation. PDS has been maintaining a net debt to EBITDA of close to 0.56, a long-term debt equity of almost insignificant. This money coming in further strengthen the balance sheet. And finally, and very importantly, this fundraise has also been a step in augmentation of cap structure. I think we got the opportunity of marquee Indian and global institutional investors, be a part of this QIP. So it helped us attaining that objective as well. On the second part of what you mentioned on growth, in quarter one, we have achieved 20% plus growth. Our order book for current quarter and going forward continues to be strong. So we believe this is going to be a good growth here. But the channelization of QIP money into the avenues that I just mentioned would be a step towards that. Can we now maintain this kind of momentum, a high double-digit growth rate for the next 4 to 5 years? So we believe we are far more positive, and this money injection is only going to fuel further growth aspirations.
Right. Hi, Mr. Jain. Congratulations on raising this money, and you're sounding optimistic about business with regard to your sourcing, with regard to growth. Give us a couple of numbers, though. What is the growth that you're guiding for this year? As you said, quarter one has seen a good start. 23% growth is what you've delivered. So GMV, what should the growth number look like? Point number one. What does it mean in terms of sales? And since you mentioned order book, fill us out with the order book number as well. GMV, sales, order book. Please go ahead.
I think the original estimate or guidance that we had foreseen for this year in the beginning was close to 10% growth. There was a bit of caution built in while giving this 10% growth for the entire year. As I mentioned, we have experienced 20% growth in quarter one. Our order books are currently in hand are 20% plus as compared to the same period last year. So therefore, we believe somewhere getting towards half of the year, we are feeling very positive that what we have achieved, what the order book is in hand, almost doubling up the growth rate from where we started as 10% in the beginning of the year is very much a possibility. And, when I say a 20% plus growth rate, this is reflecting in both GMV as well as top line as well. And the new activities that we started, the sourcing as a service and brand management, they are actually growing much more faster than our design-led sourcing business. The design-led sourcing itself is also growing, but there is far more traction. Our manufacturing business has experienced close to 50% growth with the capacities fully filled up or so.
Got it.
So therefore, to summarize, GMV, sales, order book, all are looking, very, very positive with 20% plus over last year.
Tell us a little bit more on the top line. How do you see your mix changing? As you said, manufacturing has grown well. So manufacturing is still high single digits as a percentage of the mix. Where is that number headed, say, in the next 2-3 years from here on? And also, US as a percentage of your business is still in mid-teens. I believe that you want to take it up to 40-50%. Is that on the cards, and by when?
So last year we did close to 10,500 crore turnover. And as I said, we are looking positive to get closer to 20% growth for entire year. And the manufacturing business was staying close to 6% or so in last year. It might marginally inch up to about 7.5% because it is growing at handsome 40-50% growth. Mind you, we're not adding any capacity. It is the more and more efficient and effective utilization of existing capacities. We've also acquired a 26% stake in a manufacturing entity in Sri Lanka as well. So that will also add up. And our sourcing as a service business has also seen a 40% plus growth over the same period last year. So therefore, to answer your point, in the overall pie, the share of these highly gross margin accretive businesses would be getting closer to about 8 to 9. And on top of it, if I add the brand management and the brand business, that would be another close to about 7-8%. So this year-end outlook is that somewhere about 17-18% of our business would come in from relatively high margin activities. On the North America, it was closer to about 13% of our top line last year. As mentioned earlier, in part of the previous interactions, we have carefully invested into bringing senior leaders on board who are having a strong experience, track record, and very good understanding of the North American markets. In the last 6 to 9 months, we have been into investment phase. It takes a time to start converting this investment to results. So therefore, to answer your point, I think from a 13% to about 25% in 4 to 5 years is the aspiration. And it'll take about every year you should see a 2-3% increment in terms of the overall revenue share of North America.
Right. All right, Mr. Jain, thanks a lot for sparing time and joining in, and wishing you good luck for the rest of the year. Let's now cut across to the Global FinTech Fest, where SEBI Chairperson Madhavi Puri Buch is